Brian, let's just talk a little bit about the pandemic, what we've seen over the course of this year, and how the economy is faring up. It's been almost a year, just over a year, since the first case of COVID was here in America. I know it was a very tumultuous year, but what can you tell us about what the economy looks like, at least from your seat right now?
Well, let's think about that. Last year at this time, we were over in Davos, and there was talk about this thing. We were getting briefed on for the first time, but really next week in last year's context. Yet it was not well known, and it was completely unexpected. And then we went into March and into April, and you had the shutdowns. And so the economy went down dramatically, then started rising back up. And as we look towards 2021, Candace Browning-Platt and her experts at Bank of America Securities, which is the top research firm in the world, have the U.S. growing at nearly 5% GDP. And so we have an economy about the size it was in 2018 in the second quarter, projected to grow at 5%. And the key to all that is just to continue to solve the healthcare crisis. And no matter what people say, no matter what they're thinking about, if we get the vaccine out, if we continue to provide social distancing and masks and things like that, and keep the case count starting to tip back down, you'll see the economy open up. Now, here's the good news. In the first 3 weeks of January, at Bank of America, the spending that we have, it's $3 trillion a year in 2020. In 2021, through the first 3 weeks, it has grown at 9% over last year. And that grew at 9% of the year before. So the interesting thing here is, and you could put maybe a percent extra growth on that for some of the stimulus that got dispersed in the first part of this month. But let's call it 7 or 8%. That growth rate is as strong as it's been so far this year, last year into this year. And people are spending money. People are engaged in the economy differently, again, than they could if we were completely open and people go to theaters and things like that. But they're spending money, and that's good news. And even in states like California, which had a major shutdown and is now changing, is up 3% year over year in debit credit card spending. Other states are up 7, 8%, and that's all good news. So the economy keeps moving forward, and we feel very constructive about the consumer activity.
What about savings? The savings rate, I know that grew pretty substantially. What does it look like very recently?
Well, it continues to grow, and so if you look at the disbursement of the latest round of EIP, the $600 payments that went to people, Americans with incomes under $75,000, we've received about 11 million payments so far from the government into our customers' accounts, and only about 28% of that has been spent. And so if you go back, 10 million of those came in the first week of January. So it's been a few weeks. It's only about 28% being spent. That percentage is lower than the EIP payments of last year. And so it means that customers who are working, et cetera, have the cash, and the cash is being sort of saved. Interestingly enough, the money that was spent is being spent on discretionary retail, which means it's being spent on more things, not just the necessities of life, but more discretionary, which is good news for just general economic activity. Now, let's not forget, we have an unemployment rate of 6% plus. We have a group of people who need the support of the government, need continued unemployment benefits, need these type of help to continue to make it to the other side of the river. Meanwhile, the good news is 94% of the economy and the people are working, which is good news going the other way. So that the difference between this time and maybe March and April last year is we didn't know there was any light at the end of the tunnel. Now you're starting to see it. You've seen the economies come back. Now we got work to do. And that's what we got to do. But the good news is the savings rate will bode well as we move through the year if people get out and spend. I think there's a fair amount of pent-up activity in people's accounts.
Brian, that may be the most effective argument I've heard yet about the need for a targeted stimulus, not necessarily checks to just about everybody. What would you tell Congress if they were to ask you what you thought a stimulus package should really look like?
With the last stimulus and this stimulus, I think we have to continue to focus on, just using an analogy of people crossing a bridge of the river. A lot of people are across. We need to help the people who haven't gotten across yet. So restaurants and movie theaters and travel and entertainment, they are just not open yet. Until they are, you have millions of people who can't work in those industries that we need to get to work. So we need to do that. On top of that, I think we need to help the state and locals, municipalities. Last time we talked, I used the reference of Hamilton, which took these debts that were incurred in the war, the Revolutionary War, and brought them to the United States level. Frankly, that's what we need. That's what we have to do again. States can't afford to plug the hole in their budgets due to the COVID-19 crisis. We need to help them with that and basically plug that hole for them so they can go on and do what they need to do as states. So I think whether it's schools, whether it's universities, whether it's nonprofits, whether it's performance venues and those things. I think targeted stimulus to continue to help those enterprises be in great shape when we come out of this thing, as we move through the summer into the fall, is critically important. How big that is, I'll leave the political side, but that's where the focus ought to be, is how do we help the people who haven't crossed the river yet get across the river?
But not necessarily checks to Americans who still have their jobs, maybe haven't suffered any drop in their income.
I think the more targeted it is, the more effective it is, and we can help people. It's not that the $600 doesn't help people, but we need to keep targeting it, I think, to make sure it's affordable and make sure it also has the most immediate impact.
Brian, have you thought about inflation in terms of what you anticipate? We have seen higher prices for grains, for raw materials, like in building and other places. Have you seen it show up in other places, and what's your outlook for it?
Well, this is a great debate going on in the markets, and you saw rates lift up a little bit and then come back down. And so I think right now it's premature to talk about that, because at the end of the day, we need to get this economy, which is about 90-some% back to the way it is, all the way back and growing again. Because if the U.S. economy doesn't grow, the rest of the world's in trouble because of size and dimensions and scale and scope and global impact of that economy. So I'm not sure the inflation right now is, there's parts that you can see there and prices and stuff like that, but I'm not sure it's the biggest worry. As we move through the year, I think we have to be more careful, and as we move into next year, we have to be more careful that we don't end up with such an amount of cash and stimulus in the economy that it has some of that impact. But right now, it's not the issue of the moment.
Shepard Smith here. Thanks for watching CNBC on YouTube.